Good evening. Doc Severson here for the Theo Night Report for Tuesday, January 24th. Well, today started out as a very low volume choppy day, but that soon changed as we got into the early afternoon as we got into one of these big rallies. So you can see on the S&P, we've started to break out, actually today hitting all-time new highs on the S&P 500, and 2300 is just within spitting distance, but we do have this big lead anchor down here on the weekly chart showing that any breakout attempt from here is going to be very muted and is not going to be of the explosive variety. So we're not going to see breakouts like this down here. We might see it inch up, maybe tag that 2300, but eventually what we're going to have to deal with, and I'm going to say this on just about every chart, is going to be a larger consolidation pattern until this is getting ready to, or this has worked itself off. So this big move off the election still needs to be worked off, regardless of the fact that we've had this amount of consolidation on the daily chart, right? So this has built up a lot of energy and wants to break out, but it's not going to have any success in doing so. Or if it does so, it's going to be very incremental for now. Now, if you look at the way that the market has moved in the past, we've been through this before, just in the past year, right? So we've had these big breakouts, and then we go into these same levels of exhaustion here, right? Same exhaustion kind of deals. And so what has to happen is we move into a larger consolidation pattern, But really what sets the hook is eventually a big plunge down here. Now, obviously, these have come from some very unusual events like the Brexit, like the election. It's not like we're going to get these every few months just like clockwork, right? But this is what it's causing. So first of all, a big consolidation to build up a lot of energy for this thing to get ready to move, right? Exactly that. So we prime the pump for this, and then what happens is the price comes along and some kind of event, some kind of catalyst comes along that nobody expected, and the initial move is to the downside, build up the negativity, and then flush it out to the upside. So what we're waiting for is just sort of, this is Act 1 right now. We need to go through Act 2, which is to continue to build up this energy in a larger range. So we're going to be setting up a larger trading range than this microscopic one here on the S&P. So building up a bigger range, more volatility in both directions. And then ultimately what makes this thing work is the flush to the downside. Now, if this extends a little further to the downside, then what this is going to be is not just another slingshot move here, but perhaps a move into a different form of market character. So since the June Brexit, we've been in what's called quiet and trending character. So this is where we have very, very low implied volatility. And generally what we have is stair-stepping movements here. Stair-stepping movements that come along, break out, catch everybody by surprise, and then walk sideways, break out, catch everybody by surprise. And the pattern repeats really ad infinitum, like in perpetuity, right? However you can describe this. Keeps on going until we have some kind of negative event which is not priced in. And boy, I think everybody's holding their breath to see what happens when there's negative events coming along. Everybody's checking Twitter to see whether or not, you know, the president is going to say something unusual that nobody expects. But so far, actually, what got out today was, executive orders on the pipeline, things like that. And all of a sudden, what happened was some sectors really took off today. So if I look over here at the market watch on this, if I just look at the sector spiders, so this one here is the spiders by itself. It went up, a modest amount. Here's the VIX, dropped a lot, right? And here's the builders, XLB, building materials, okay? Big jump here. And so the rest of these got some nice movement. Energy, financials, surprisingly, have been in the doghouse over the last few days. Financials perked up. And some of the other ones that have done well are industrials and technology and consumer staples. And then finally, consumer discretionary. Really, the only sector having any kind of problems at all is healthcare. Wonder why? So let's talk about how we're going to be trading this market going forward. So I'll bring up as an example IBM. Now today we just closed out a trade on IBM that was good for at least 50%. And let's talk about the bigger picture here. So obviously when we have something like this happening with IBM, we have a downward channel on a monthly chart, lower highs and lower lows, lower highs, lower lows. Okay, we just broke above that channel, put in an important higher low. Okay, and what we saw was, this is kind of the key to this whole thing working. So first of all, what we saw on the monthly chart, an uptrend. Weekly chart, uptrend. Okay, so we want to be taking something in the direction of the major trend here with something like IBM, right? And so the signal came the other day as earnings cleared out, and actually they came in with pretty good earnings, right? So this is the key, something like this, where we have a tight little consolidation pattern. And this absolutely just broke out of here with violence from here. And it was a very simple trade because we got alerted, because we noticed this, and just simply set up an alert as it was breaking higher to just take ourselves into the trade along with here. And then we're just getting the benefit of all this momentum. So while markets are doing this kind of stair-stepping behavior, driving everybody crazy, right? We're just looking for the next breakout on everything else. I mean, this is actually a very common type of market character. Actually, markets are in quiet and trending about 80% of the time. Now, we're going to play this as long as we can while it occurs, but what's right around the corner is perhaps more volatility, as I spoke about, with a weekly chart running out of gas. So any breakout to the upside may not be very long lasting. So any bullish trades that we're going to be taking right now are going to be very short term, very quick, trying to basically reduce our time risk as much as possible while we're in these, and looking for the larger time frame trend, which is going to be to the downside as that weekly consolidation gets established. So probably the best trade for that to look at is going to be on the Dow Jones. So we can just look at the DJI here. And at some point here, the price will be above the Pisani line here at about 20,000. And that poor gentleman can, move on in his life and go watch something else other than Dow 20,000 every single day for about the last 2 months, right? So if and when this breaks above here, I just don't see it as being a very long-term trend. So I think it may get above there and then get faded right after that point. So I believe that we're going to move from this smaller range on any breakout. It's going to turn into a larger range, which will more than likely confound the vast number of investors out there saying, wait a minute, I thought it just broke out. What's it doing going back into this pattern? So I would anticipate the Dow moving into perhaps a larger range here, and actually this is very, very normal. This could even include a pullback along the way. I mean, if you were to look back in the chart here for the last few years, and if you were to see, these strong rallies like that, if you were to see a quick little pullback like this, or maybe even a larger time frame consolidation like this, you look at this 3-4 years later and you say, oh, well, that's very normal, isn't it? Oh, this consolidation and pullback along the way, oh, that's very normal, isn't it? Okay, let me warn you, this is not going to feel normal when we drop from 20,000 maybe down to 19,500 or 19,250 or so. This is going to feel like the next bear market kicking in. You're going to have Jim Cramer on television on the Today Show going, all right, folks, settle down. This is what's going on. I mean, people are going to lose their minds because they are not used to red candles of any size since we've had this breakout. In fact, even this move was very, very gentle, very, very minor. We really, truly have not had any sort of volatility of any type really since last January, about a year ago. So we've been through these periods before where we've gone through almost an entire year. Like here's 2013 was just a huge year. And even in 2013, we had quite a bit of volatility showing up. If nothing else, just because this chart was exhausted in the same manner that it is right now. And range expansion like this leads to range contraction. It happens every time. It's consistent. It occurs, and it will occur when most people are not looking for it. So in summary here, shorter term, we're going to look for opportunities to maybe ride this thing up a few more points, see if there's any more stocks like IBM that are setting up out of perfect breakout patterns. But we're looking to reduce our time risk. We're not going to be in them for very long. And in fact, we're going to start to set up for some longer term consolidation, which we could certainly swing to the downside as markets take a little bit of a rest as we get into the latter part of winter here in the U.S. That is it for today's report. Thanks for listening, folks, and we'll see you tomorrow.